Hi everyone, we are live. My name is David Cosmer. I am the creator of TimingResearch.com. Um, Today we are going to be talking about the 65th weekly report for Timing Research, and this is our show for December 22nd, 2014. If you have not had a chance to read over this week's report yet, you can go to TimingResearch.com/reports and download it. And I have Dave Landry guest hosting for me again this week, so I'm going to turn over the show to him now.
Thank you, David, for having me back again. Thanks to TimingResearch.com. Also, today we have Craig Hill of TradingConcepts.com. Craig, tell us a little bit about yourself and tell us a little bit about TradingConceptsInc.com. Sorry, TradingConceptsInc.com.
Yeah, thanks, Dave. And first of all, thanks for having me today. TradingConceptsInc.com. What we do is we provide education, trading education, also from E-minis through forex, ETFs, power, stock trading. We've got mentoring programs. We've got some smaller, programs, and the idea is to just teach traders the reality of the markets and help them come up with an edge. Provide them with a foundation to come up with an edge so that they could successfully and consistently profit in the markets. I myself am moderating our live E-mini trading room and help Todd Mitchell, who is the owner and CEO of Trading Concepts, just do what we do best. So that's pretty much it. So
cool. Okay, we have Milton Mormonides, I hope I said that correctly, and George Avedon, FinancialJuice.com. Milton and George, tell us a little bit about yourselves and tell us about FinancialJuice.com. Looks like a pretty interesting website you guys have over there.
Thanks so much, Dave. My name is George Avedon. I work with Milton Mormonides with Unusual Activity, powered by FinancialJuice.com. And what we do, we provide information to both professional, non-professional, retail investors and traders with specific actionable news throughout the trading day. This consists of either large and unusual option volume detected by our algorithms, proprietary algorithms, whether they can be large trades or blocks specifically on the equity derivative. We spot specific insider purchases that may have an impact on the particular security during the day. And we also concentrate on social media news filtered and quote-unquote filtered. There's certainly a lot of social media information out there, and what we do, we do everything we can with the use of our own algorithms and our own proprietary mechanisms to provide the user, the subscriber, with the right information, the right balance of information to have a really productive trading day. And some of the information may not be immediate, but it does, you can certainly can be used by swing traders as well, a little bit more long term. So that's really our concentration, and that's what we provide our clients.
Cool. Okay, next up we have Glenn Thompson, Pacific Trading Academy.com. Glenn, tell us a little bit about yourself and tell us a little bit about PacificTradingAcademy.com.
Well, certainly. Thank you, Dave, for having me here. I was to have been here, I guess, a couple of weeks ago, and prohibitive technical issues that kept that from occurring, but it's good to be here, and again, appreciate it. I've been with Pacific Trading Academy since its inception, approximately, well, actually now almost 14 years. And we're an educational institute focused on teaching and education primarily for retail traders, from beginners to experts and the entire spectrum of participants in the in between. We have about, let's see, I have about 5 other coworkers. in doing this, so we were able to cover different market niche areas and so forth. But I primarily focus on teaching beginners through experts, and I do it on with a one-on-one mentoring kind of regime. One of my coworkers has a trading room for those who are interested in short-term intraday activity, and he's primarily trading the E-mini. I do that, and I've done that in the past. I'm not currently doing that. I'm primarily just focused on working with individual traders pretty intensively, and I do it through mentoring sessions. We work it out to their schedule, so we have a lot of flexibility. We utilize all the technology and that's out there to present this. And again, in the course of 13 years now teaching, I've had occasion to work with probably thousands of people all over the planet in terms of different areas. I'm a technician, so my focus is on technical analysis. I've been trading for almost 34 years. Most of my career was on Wall Street, and then about 18 years ago moved westward. So we're based in Southern Cal, and I work out of my home office, and it's been a complimentary experience in the teaching and the I still trade my own accounts, but my focus again is on technicals. But my primary incentive is to generate and maximize returns. So to the extent I have a background in all types of analysis, be it fundamental, technical, quantitative, whatever it is, I'm able to present that to the traders out there looking to augment and improve their acumen and capacities and tool set. So more or less that's what we do.
Cool, cool. Yeah, you guys have been around for a while. Recognize the name on that one. I'm Dave Landry. I can be found at DaveLandry.com. I've been trading for a very long time. Worked on both sides of the markets. I guess I've been on the retail side for a while, and then I've also spent about 14 years on the institutional side, involved with hedge funds, and so I do both institutional and retail consulting. I do have a 21-page report that's free to anyone who wants it on the basics of my methodology. I'm a pullback guy. I think you can only predict the markets when it comes to short term. I focus mostly on stocks, but we'll trade other markets. And I think you can stick with positions as long as they move in your favor. So I'm slotted as a swing trader, and my first two books have the word swing trading in the title. But I'll stay with a position for as long as years, provided it continues to move in my favor. So I'm best known as a trend follower, and then some people actually call me a trend-following moron. That's a nickname that I've acquired in this industry. Okay, let's go over to Craig. Craig, you're first up. Question 2 is going to be, based on any technical or fundamental indicators you want to use, would you guess that the S&P 500 index will move higher or lower this week? And that would be from now until Friday's close, which is December 26th.
Well, this is one of those. I mean, we've got Christmas holiday coming up. Markets are only open a half day on Wednesday. Tomorrow is going to be probably the deciding factor. We've got new news coming out. Some catalyst news coming out that could be the catalyst that'll drive this market coming out tomorrow. But we're kind of due for a pullback. It's going to be a matter whether or not we break down through that 65 area, 63, 65 area. I think that's going to be key. But it's kind of hard to say. I short term. I trade short term, day trading the E-minis, and I just kind of go with the flow and react to what's going on in the market instead of trying to predict.
Okay.
Like you said, it's easier to predict short term than it is longer term.
Right.
So we've already had 1, 2, 3 pushes up after that big gap up on the 18th. So I think we're kind of due for a pullback, but the deciding factor is whether or not we can take out 65, and we'll see if when the news hits tomorrow, whether or not we get that push lower. So
okay, I'm going to nail you down for a lower.
Yes, I would say lower.
Okay, and rate your confidence in answer to question number 2, which that was that question, on a scale of 0 to 10, with 0 being no confidence and 10 being extremely confident.
I would say about a 6.
Okay.
It's just so, yeah.
Okay, cool. All right, George and or Milton. I don't know if you guys are going to give the same opinion or not, but based on any technical or fundamental indicators you want to use, would you guess that the S&P index will move higher or lower this week? And this is from now until Friday's close, December 26th.
All right. Well, this is Milt, and I'm gonna take this question. We're looking at we're strictly a technical kind of guys as well on our side as well. So we have a few ideas to what we're thinking the next week or so. Our ideal is a lower trade into the end of the week. We have Greece tomorrow, which everyone knows what the basic answer is going to be. I think it's going to be a no. I think that is going to be somewhat of a negative feel in a way, but technically we're looking at we're right near resistance levels on the upside on the ES futures, the 2075 level. We're thinking about the 2060s as support, so we're thinking about a lower but not much of a move lower to the end of the week. Case in point, it's a holiday week, so you're going to have those gyrations, but I don't think it's going to be anything drastic.
Yeah, it's going to be probably thin and choppy out there. Based on your prediction on that scale of 0 to 10, what is your confidence in that?
Like 7.
7, very good. Okay, let's go over to Glenn. Glenn, based on any technical fundamental indicators you want to use, would you guess that the S&P index will move higher or lower this week? And that's for the close ending on December 26th, Friday.
Sure. Sideways to lower. So my literal response is lower by the end of the week.
Okay.
And I'd give that about a 7 on a 70% probability. And I agree with you, Dave, when you mentioned you're a trend follower. I am. I believe price discounts everything. My take is, and my indications are time. Certainly, I look at price, but I come from the vantage point of the market's going to do what it's going to do at certain time intervals, when given certain amounts of time elapse have occurred. If you look at the rotations or I've noticed a correlation between what the bonds are doing and the ES that I trade my own, in my own accounts. But September 22nd, the bonds had a bottom. The stocks topped out on the 19th, so they're closely correlated. You had a precise correlation, a top and a bottom in both markets on 10/15, October 15th. This ES had a top on November 26th. It wasn't as critical. Where you had a correlation again, more or less. This S&P topped out on December 5. For the bonds, it was December 3. Coming more to the present, you had a bottom in the stocks December 16, corresponding top in the bonds on the same date. And bringing us through the present, I had a projection for a turnaround in both markets this past Saturday, the 20th. So when that comes in, when you have a time target coming in on the weekend, I look for the surrounding days. So that brings us to now. I wish you had asked me this, or I wish we were conducting this call or discussion after the close today, because I'm seeing in the ES this morning what looks like it could be an inside formation. About 67% of the time when you've got an inside series of price formations, it tends to correlate with trend continuation. So that would suggest to me, in coordination with my time points, I can expect, that's why I'm suggesting we're going to drift sideways to lower through the end of the week. My next projected time target for the ES, the stock market, January 13. So again, my scenario that I've worked out is sideways to lower into the January 13th, or actually into December 28, which is this coming weekend. And then I expect the market the stock sector to take off again. But basically, the quick answer is lower this week, 70% likelihood. Yeah.
Fantastic. Good stuff. It's interesting you talked about the intermarket technical analysis, and one thing that I found with that is it seems like it worked a lot better years ago than it does now, but it's still it only matters when it matters. So it's interesting that you brought those things up, because when you do have those inverse correlations or even positive correlations, it's good to pay attention to them. But just for listeners out there, sometimes they, like everything out there, it doesn't work all the time.
Yeah, they don't. Sometimes they shift the correlation. Yeah, so I just use that as one factor. Certainly, yeah. I'm not going to trade solely on it. Yeah, solely.
Yeah, but no, it's good stuff. I mean, I think that's I learned something at each one of these shows, and that's why I love doing them. And I'm glad that David has had me back to do them, because I think everybody brings a little something, and sometimes it reminds me of things that I may have forgotten about. But so good stuff on that intermarket technical analysis. I'm a trend follower, like I said earlier. I'm not I guess I'm a reversion to the mean player in the sense that I play pullbacks, which are reversions to the mean in the direction of the trend. We did have a pretty serious pullback in the Ps, which was on the cusp of almost a rollover. I have a pattern called bow ties, and we almost had a sell signal on that. But I tell people, don't anticipate these sell signals. Wait till you actually have one, and then of course the market turns straight back up. I'm not a big fan of seasonals, but I'm also a person who's not going to fight the tape. Now, we had this V-shaped recovery out of the pullback, and the problem with those is it makes the market overbought by the time it reaches its old high. So we're already a little overbought here, but I'm not going to try to outthink it too much, even though we are a little bit overbought. I'm going to go with higher simply because we're close to new highs. I hate this argument, but I think that where else are you going to go? We had a few guests recently who have said that on this show, and I agree with them. I'd hate to buy the market, just like Glenn said, in and of itself, just based on one thing. But we do have that seasonal bias, and then I think these new highs will get new highs because there's no place else to go. And then worst case, I could just always fall back on my trend following and say, well, it's at new highs, and it's been headed higher for a long time, so let's just stick with the trend. So I'm going to go ahead and stick with the trend. I'm going to go higher. And I'm going to give that a confidence. I'm going to go out on a limb here. I'll give it a confidence of 8 on that. So we've got two. What do we have there, Dave? Have we got 3 downs and 1 up? I think David's muted.
Yeah.
Cool.
That was my count. Yes.
Okay. Yeah. Good. Well, that's cool. It's and that's the thing too. Is like a lot of times. People out there who are trying to learn trading, they think that we all have the answers, and we have a good idea where the market's headed, but we never know for sure, and that's something that novices really need to wrap their head around. The next question sort of dovetails in with the first, or the second question, I should say, or the prior question. What developing events, and they can be technical or fundamental, and I think Milton alluded to a few of these already. Will you be watching out for next week? And this week, between now and Friday, that might have a positive, negative impact on the S&P 500 and other U.S. markets. So let's start with Craig once again on this one.
Yeah, what I'm looking at is, like I said, I'm short term. So what I'm looking at is tomorrow morning during the pre-market session, we've got durable goods, GDP, and personal income and outlays coming out at 8:30. So we'll see how the market reacts to that, and then we've got some big numbers coming out. New home sales at 10, and consumer sentiment at 9:55 after the opening bell. So we'll kind of see how the market reacts to that. And like I mentioned before, what I'm really looking for is whether or not we can hold the 62 to 64 area. That looks like we've got solid support right in there. In fact, I was looking for a pullback to see if we're going to fill that gap today, and it looked like things were going to break down, but then there was we had a failed pattern there, and then we ended up pushing higher. If we break down through 62, 64, really even more solid is that 59, 57. So if we can hold, I think the bulls should be able to maintain control. Above 59, 57, if we can hold that in response to that news coming out on Tuesday. So that's going to be the key. And I agree with, sorry, Dave, Glenn and is it Milton?
Yeah, Milton and George are both over there together.
Yeah, the whole sideways to lower thing, and because we got a half day on Wednesday, and markets are closed on Thursday. So unless we get some type of railing on Friday, it just, I'm kind of expecting sideways to lower, but then anything can happen. So, but yeah, that's going to be it. It's going to be see how that news comes out tomorrow, and whether or not we can hold, 59, 57 if we do pull back, in response to that news tomorrow.
Yeah, so. And it's sort of like, I'm kind of picking up on a vibe here about trading around these holidays and shortened sessions, and sometimes it seems like while the cat's away, the mice will play, and it seems like there are fun and games that sometimes that happen in the markets that can make them a little tricky. And I tell people, my clients, I said, look, unless you really like a setup, or unless I really, really like a setup, don't take on any new positions around these holidays like this, because it can be a little thin and choppy and a little scary too. Okay. All right, let's go to Milton and George, whoever wants to take it, or both of you guys. I know you pay a lot of attention to a lot of events, so I imagine you'll have some interesting things to say on this. So what developing events, and they can be technical or fundamental, will you be watching out for this week, which ends on the 26th, that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Okay, I'm going to take this one, and George is going to have a little follow-up as well. This is Milton. I have a few things that we're watching on our side. Initially, like I mentioned earlier, the resistance of the upside technically on the ES, watching that number clearly, the 2075. The other thing we're watching closely is this crude oil number of that 53.60, that previous low. If that is breached, we believe that that could be a negative effect on the whole entire market as a whole and that whole industry. And lastly, which a lot of people are not even mentioning is, well, I'm not hearing a lot of people mention, is this Greek vote. I mentioned it earlier. You have the vote tomorrow. You have the vote coming in on Monday. Ideally, from what we've been hearing and listening to, many people believe this is going to be a no vote, which could lead to snap elections in Greece, which we all know 2-3 years ago what happened when Greece was in the picture. The markets were in a little turmoil. And I believe that, if the Greek elections do happen, I think we're going to see a negative feel overall on the markets, because the current party in the lead, quote unquote, is the party that is anti-austerity and anti-Europe. So we believe that if that happens to happen, the markets could take that as a short-term negative. And with the markets near all-time highs, we could see a little pullback on that side. And George is going to throw in a little follow-up as well.
So one of the things that we've been seeing over the last several months, and I'm sure you folks have been as well, is when specific geopolitical or macroeconomic news come in and they initially roil the markets, whether there's an initial indication down or up and so forth, after that there's a considerable time where the markets begin to internalize that particular risk. So for example, Milton talked about the Greek vote. Certainly it roiled the markets. What was it, about a week and a half ago or so, Milt, that the news came out, and it really spooked the markets, kind of very interestingly. Also, one of the things that we're watching, certainly oil, we're watching Russia's reaction to oil, to the ruble, the actions of the central bank, specifically the Russian central bank, also the relationship with China. You're getting indication that because of the sanctions from the West, the relationship with the Russian-China relationship is, let's call it, improving, with respect to Russia sending the raw materials. They found a good buyer for them in China. That's one of the main things that we're looking at for. Also with respect to oil, from a purely, it's a little bit geopolitical, but it's a little bit more on the macroeconomic side, and a little bit of a saber rattling, if you will, is coming from OPEC. We even had this morning that Saudi Arabia commenting that they're very comfortable with oil being at these levels, and quote unquote, it's not going up to 100. So clearly, a lot of ministers, a lot of finance ministers around the globe are commenting on oil, specifically from OPEC, and it is impacting how oil is trading. On that end, the other piece of things that we're looking at, remember, in January, we're going to hear from the ECB. So I wonder if we're going to see anything more out of the European central bankers with respect to commentary, specifically from a macroeconomic perspective. Remember, because the real risk in the European nations is the D word, is deflation, because everyone is talking about the lower inflation expectations. Really, it's deflation that they're really worried about. So there's a plethora of information that could possibly roil more, at least, jolt markets this week. But our anticipation is that this will be a relatively quiet week, certainly with the holiday week, and a lot of traders are away. But those are the few of the things that we're monitoring in addition to many other things.
Yeah, a lot of moving parts out there. Milton, George, real quick, you guys said that lower oil would be bad for the market, and it seems like the media takes both sides of that argument, depending on which way the wind's blowing. Just a quick question, or if you have a quick answer on that, is there a reason why, at this particular point in time, lower oil you think would mean lower stock prices?
Well, I'll take this real quick.
Please.
It's good for the consumer. I'm not gonna deny that. It's great for us. I think for the technically on the market, it's a negative in the fact that no one really knows what could happen, the events that could happen with lower oil. All these small shale companies, all these companies that need $65, $70 barrel oils, what could possibly happen 2-3 months down the road? It's possibly one of those contagion effects where what happens if one of these default? Those loans, that amount that's sitting out there, trillions of dollars, what happens? Are banks going to be involved? What is the effect of such low oil prices? Just specifically talking on a market side view. Outside of that, it stems to the fact that when the stronger oil is, the more consumption, the stronger global economies are. So we believe that with the lower priced oils, a lot of individual small shale companies in the U.S. will be affected negatively, and could lead to some sort of a 1, 2, 3 possible defaults before a bottom is finally formed. So we think of it as a negative feel individually on these small-term companies, with a possible reflection with banks and down the road.
Yeah, interesting point about the kind of the ripple effect. George, you had something else on that, or was it Milton?
Yeah, no, I just want to quickly piggyback on that. Remember, we want to also watch those MLPs, the HYG. Remember, a lot of Milton's spot on. A lot of these small companies, man, they're leveraged to the gills, especially on the smaller oil names, and so. If they're, whatever they're producing, if their margin is so much less than before of $107, $114 oil, how will they be repaying that debt? And remember, a lot of investors have been chasing yield within the last few years. So you're looking at MLPs, you're looking at HYG. Milton said the bank, so clearly it can have a negative impact on that as well. Also, remember, a lower oil from an purely Econ 101 perspective, it contributes to a lower PPI and lower CPI numbers. So that's something else from a purely macroeconomic perspective. So that's just something else to put in the stewing pot.
Yeah, amen. All right, Glenn Thompson, you're last up on this. What developing events, technical or fundamental, will you be watching out for this week? And this weekend's obviously on Friday 26th for the market's purposes, that might have a positive or negative impact on the S&P 500 and other U.S. markets.
Sure. I think there's a symmetry in terms of my thoughts, and I guess it was Milton and George who were just speaking, but I have a twist. I'm looking initially for a positive in the fact of, and I think oil is the key component that I want to re-emphasize. But my question is this, or my thought is this: a few weeks ago, the Saudis basically said they're happy with oil around $60 a barrel. The latest I've heard is that they'll let it slide. So clearly, that's an indication to me their priority is market share, not revenue. Also is a distinction. They haven't made a cut. They're talking the market down. So in a sense, what's my takeaway from that? That's an indication they're putting the U.S. oil production and edifice to the acid test. Let's see how low the price can go, and let's see to what extent we can reduce U.S. oil import and production capacity. I don't think they're happy. They're giving. I'd rather at $60, 100% production. They're missing out on what? I think they're a net exporter of about 600, whatever it is, 6 million barrels per day. So that's $138 million of revenue per day that they're missing currently. but I think they're willing to play that game. But doing so without a cut, I think it's immediate. This is a positive for the market. If there are actual cuts that come into place, then I think it could be more systemic and be more persistent of a problem. But I think that's the game that that OPEC and especially the Saudis are playing right now. It's all about market share, and they're talking the market down. They haven't affected any cut, and I think that's their leverage at this point. I think the other points that were brought up that are quite salient. I'm interested in the central bank's response to this. I foresee a strengthening dollar at least out into the first quarter of next year. Janet Yellen has indicated they're going to refrain from raising rates at least through that amount of time. So I think short term, again, falling oil prices are going to be productive. Long term, if it lasts and persists out beyond the first quarter, there could be some problems. And if we actually start to see cuts in oil production occur, I could see that as a problem. In terms of Russia, with this, they're losing. Russia's actually the largest producer on the planet, so they're losing significantly. That's their downfall. Their countermeasure would be, to what extent do they start dumping U.S. paper in the market? We've seen that already occurring between not only Russia, China, India, Germany, I guess, but you've got Belgium coming in, and I think Belgium is just a proxy for some other entity in the world out there purchasing or picking up the slack of whatever paper, U.S. Treasury paper is being dumped on the market. But again, this week in short term, I think and I don't want to fall. I was thinking, well, the seasonal component. We're in a holiday situation. Anything that would occur, you're going to see it exacerbated because of the lower liquidities. But my key thing that I would be focused on is what's going on in the next week to 2 weeks with oil, the corresponding central bank response, and how the dollar plays out. I think that will determine the fate of all, the equity market in particular. But again, I am bullish the stock market going into basically at least through the first quarter. I just expect short term, like for the next week, as we mentioned, a decline, a slight consolidation correction. But I see equity prices rising because I don't really see the fall in oil unless there's a cut and it persists and it keeps. If we get down below $40 or something, then that's another issue, even if whether it's a cut or just they continue to talk the oil price down. But I do think, I agree with the previous speakers, that that's a key component to watch and will have ramifications in terms of the equity sector.
Oh, okay. Well, at $60 a barrel, that's a pretty good price for the barrel itself. That was they said that on Saturday Night Live a couple of weeks ago. I ignore all news. I think it's fascinating. I really enjoyed hearing you guys talk about it. The problem that I have is you end up with a lot of moving pieces, and that's why I've been affectionately called the trend following moron, just because I follow the charts up and down. S&P just shy of all-time highs in here, around 2075. So I'm going to be watching that level. Ideally, I'd like to see it take it out and keep on going. I hate the argument again, just to reiterate, where else you're going to go, but I do think that new highs could get even more new highs. One thing that I just absolutely loved is the last time we had a little bit of a spill, there are so many bears out there, and then I guess rightfully so, because there's so many things that are happening in the world that could back their arguments. But it just seems like as soon as the market goes just a little bit of a rollover, everybody comes rushing out, and it seemed really bearish. So I think that's actually helped us out, and that's why you had this rally right back up. I think this was a major short covering rally, but I think that as long as we get back to new highs, I'm not going to question why we are at or near new highs. I'm also keeping an eye at 120 or ish, somewhere around that on the Russell 2000. I'd like to see that Russell get back to all-time highs. That's been a big question mark. I think as Glenn and Milton were pointing out, part of the problem there could be oil because of those smaller cap issues that are in the Russell, because the Russell seems to have been hit fairly hard recently, but then it snapped right back, and it's just so far you just can't keep a good market down. 4,800 I'm also watching in the NASDAQ. The only thing that I'd like to throw in, and I think I've said this every week that I've been here for the past 6 weeks or so, is that every time this market has sold off since 2009, it's come right back, and we've had a few sell signals, and some of them worked a little bit for us, but none of them paid off real big. And I think there is a complacency out there, and I think one of these times the sell-off is going to become more than just that. I think it's become a bona fide top, and I think that it will get ugly, and I think some of these events that you guys mentioned could be the catalyst or the catalyst blamed for that, at least. But as long as it's going higher, I'm not going to fight it. So don't fight the tape, don't fight the trend. Okay, Craig, let's go over to you. Any closing thoughts and anything else you want to mention about TradingConceptsInc.com?
Yeah, I thought we were going to go over that last question. Did you want to do that, or?
Oh, I'm sorry. Hang on. Yeah, let's get the last question.
Question 4.
Yeah, I got ahead of myself. All right. Thank you, David. Thank you, Craig. Appreciate that.
Sure.
Okay, the question of the week, which still goes over to Craig. If you could trade only one pattern, what would it be?
Well, you have to ask yourself what pattern is it. Are you looking at a chart pattern or price pattern? So what I look for is, it sounds like a trade very similar to Dave Landry, just shorter term. You know, mainly my main focus is the minis, and what I'm looking for is just high probability, high reward, low risk trades. And the chart patterns that I look for are compression patterns. Anything that compresses, like today, for example, the market kind of compressed right around 2070 and finally broke to the upside. Looked like it was actually going to break to the downside. We had you know, somewhat bearish market internals, and it was pretty much a failed pattern and then breaking to the upside. What I like about that is because if you're wrong, you just get right back in, or just wait for it to break out. If you've already tried to, you know, trade it and you got stopped out, it's usually, like I said, a low risk, high reward trading opportunity. And then as far as price patterns go, you know, the hammer pattern or shooting star, you know, that shows you rejection, especially if they're real powerful at support or resistance. You know, you got to look to the left to define that prior support or resistance, and you know, look for those hammer patterns at support, and especially in an uptrend, and the shooting star patterns or topping tails at resistance in a downtrend, and those usually offer up the best opportunities. You know, the biggest bang for your buck. You know, low risk, high reward trading opportunities. So,
okay.
Those are my thoughts.
Let me nail you down on that. Sounds to me, correct me if I'm wrong, as far as basically we're talking about trading like one particular pattern or one particular setup, and you said some interesting things in here. And I'm a big fan of the expansion of volatility from compression too. So I'm going to nail you down and say that you would say a compression of volatility and then a breakout afterwards, or how would you define that?
Yeah, compression volatility. You know, looking for the market to compress and then a breakout in that direction.
Okay.
You know, from a charting standpoint, from looking at chart patterns, and then obviously I look at price patterns too. So, and that's my favorite price pattern, is that hammer pattern, shooting star pattern. Shows price rejection.
Okay, good stuff. Milton and George, if you could just trade one pattern, what would it be?
On a technical basis, we basically love the ideal support resistance breakouts, but we love to see a volume conviction of, you know, on those breakouts, something where the volume, you see an immense amount of volume when a resistance level is broken, or the support level broken to the downside, followed by extreme volume. Those are key for us. We love to find that. We love to scan our systems for anything on that sort for a day or a swing trade to continue the move. Like I said, support resistance breakouts with conviction volume to follow it through. That's
Okay.
our basic ideal technical breaks.
Okay. All right, Glenn, to you. If you could trade only one pattern, what would it be?
It's a hard question. It's a good question, Dave. I looked at the list of potential answers that David had sent me, and I work and utilize and kind of see the pros and cons of all of the ones that we're aware of. I would have to pick, if you press me, the Gartley, but again with qualifications, because but yeah, that would be my literal response. If I could reformulate the question, if we have a moment, or do we have a moment for me to elaborate on that?
Go ahead.
Yeah, I look at any price pattern. You know, I agree with the previous responses, the compression of volatility and then a breakout. Certainly, again, my answer, given the list of patterns you guys have mentioned, would probably be, you know, put me on a desert island, be a Gartley. But here's my real response.
But that's the answer we're looking for, though, the Gartley.
Okay.
Go ahead. Keep going.
Sure.
Keep going.
The pattern, essentially, of everything I do, I kind of am very similar to you. I work from an initial assumption of persistency of trend. And then I can do all sorts of tests, or Hurst exponent or whatever, to see if the trend is persisting. The pattern I really look for is, given the momentum of any given market's trend, is where do I see a preponderance of contraindications? Recognizing that any given price pattern, be it a Gartley, a wave count, a candlestick formation, etc., I know that that particular pattern, or any pattern, is going to have a certain statistical historical record. It works 67% of the time. It doesn't work the balance of the time. I'm going to go by that, and also I'll stay with the Gartley. But I realize that the microstructure, there's a infinite number of ways by which any particular statistical history of a pattern can work. All it takes is one trader somewhere on this planet to disrupt that correlation.
Yeah,
so,
Douglas once said, all it takes is one trader to screw up a perfectly good
exactly.
trade. So,
that's what he's a big picture. You know, so the pattern I would go with in my thinking conceptually is, where do I get the greatest amount of correlations? If I have a Gartley correlated with a hammer, a shooting star, along with compression, I'm looking for a few different things that, in spite of their differences, will align. That's my pattern.
Yeah, that's interesting, because it's not always the pattern in and of itself. It's the selection of the market, or a selection of the pattern that makes a difference too, and that comes with experience. And you said one pattern, but you also said about 10 different things that could factor into that pattern. And I think that's important for people to realize, that you could have a textbook pattern as far as it'll look like it looks in a textbook, but there are some nuances that take a little experience to pick the best patterns. Yeah.
Dave, I always tell the students I work with, if I could find the one pattern, if there were such a hypothetical pattern or structure or setup out there that I knew with perfect certainty had certainty, then number one, I wouldn't tell anyone. I always jokingly tell people, don't keep it to yourself. But to the extent I'm aware, at least I'm not aware of any perfect pattern. That's why I purposely look for a few different patterns where that tend to line up, and that's my pattern, so to speak.
Yeah, I agree. And I often say, the day I find the Holy Grail will be the last day you see my fat ass.
Right, you won't see us.
So it's statistics, but we do have an edge, and everyone here is very intelligent, from what I could tell this week, and we have our edge. We trade within our edge, and we know we're going to be wrong sometimes. Now, for me to answer this question, I would just say pullbacks, because my entire methodology is based on pullbacks. But to kind of, in the spirit of the question, if I had to pick one pattern and only trade it at one pattern, I would say persistent pullbacks. And you alluded to this, Glenn. The persistency is a market's ability to go up day after day after day after day after day. And you could use something complex like linear regression to identify that, because that is pretty much exactly the definition of linear regression. And I don't know the exact math, but to fit that line. But to fit the line, all you need to do is draw a trend line through as many bars as possible. And if anybody wants that persistent pullback pattern, I'll be happy to send it to them, send them the chapter out of the book. And after I have a persistent pullback, what I like to look for in that pullback itself is a pattern called a TKO, which I suppose would be somewhat like, I guess, a hammer in candle speak. I'm not a big candle fan, but you would have a sharp sell-off, and that's what a pattern I call a TKO. So a persistent pullback can have a TKO within it. So to nail me down, I would say if I just had to do one pattern, there'd be persistent pullbacks. But like Glenn said, there's certain nuances and stuff you could kind of combine in with that. And if I could combine that one other pattern, it would be a persistent pullback with a nice TKO. And a TKO is a trend knockout. And my thinking there is that it's knocking out the weak hands, the Johnny-come-latelys, those who just threw in the towel and bought that persistent trend up towards the high. And that's the fast money. And those are the people, those are the, pardon my French, a-holes that are going to dump their position on top of you and take you out with them. And if they're knocked out with that trend knockout move, especially in a persistent trend that looks like it's going to go up forever, that could be a wonderful time to enter a market. And the other thing it does is it attracts the eager shorts who rush in and short at that first sign of a market spilling. And if that pattern triggers, that TKO out of that persistent trend, it can be a very powerful trade. In fact, if I'm working with a new guy and they're struggling, trying to recognize things and trade, I'll just have them trade persistent pullbacks, just that and nothing else. Because if you can't trade one pattern and you're not successful with one pattern, you won't be successful with 10 different patterns. So trade one thing, get good at it, and then start adding on from there. Okay. Craig, let's go to you, and looks like now is the time to wrap the show. So anything else, any closing thoughts or anything else you want to tell us about TradingConceptsInc.com?
Not really. I mean, we provide, Trading Concepts provides educational services. We've got a live trading room. We've got a few different subscription services. One thing I did not mention is, and it's primarily because I'm focused more on the E-minis, and Todd's focused more on ETFs, E-minis, and stocks, and Doc Severson, one of the other guys that works with us, he is our options guru, and he's really good at understanding and teaching the different option strategies. So we've got a great team, and we're probably going to be branching out and do some more one-on-one mentoring. But right now I think that's it. I think I summed it up at the beginning. So I appreciate your time, and thanks for letting me be here. Dave, thanks for asking me to join in today. I appreciate it. And cool. With that said, y'all have a Merry Christmas.
You too, Craig. Okay, let's go to George and Milton. Any closing thoughts? Anything else you want to tell us about Financial Juice or unusual activity in closing here?
Absolutely. First of all, thanks for having us on. It's been a real pleasure. Our service is called Unusual Activity, and you can find us on FinancialJuice.com. So what it is really, it's a real-time market information, and we filter it with volume and price. And so whatever news is out there, whether it's data-based, whether it's a option, we're detecting a particular option trade that may impact a particular underlying security, whether we're detecting an insider purchase, whether there's specific social media news that are impacting a security, actionable news. What's the impact on volume and price? To actually see that in real time is really wonderful, and so that's what we do. As you see, we also provide technical analysis throughout the day. So it's a mix of news, it's a mix of fundamental, it's a mix of technical analysis, and really geared towards filtering that with volume and price and that inflection on the security.
Okay. Interesting stuff. Glenn, let's go to you. Any closing thoughts? Anything else you'd like to add in about PacificTradingAcademy.com or yourself
Sure.
or the markets or whatever?
Yeah. Well, again, to reiterate and amplify what everyone else has said, I appreciate the invite and glad to be here. I've enjoyed the discussion, and thanks again. Look forward to possibly doing it again in the new year. Again, I've been with PacificTradingAcademy.com. If you'd like to get more information, you can check out our website at that namesake. I've been there for 13 years and enjoy it thoroughly because I have a passion for the markets and speculation, and I personally work with all types of traders. My focus is on technicals. Ironically, I started my career on the fundamental front and was not successful. So as I began to incorporate more technical ideas, I became more successful. In my own mentoring, the only thing that I don't do, unless I can't, is I don't primarily focus on fundamental trading because I'm not set up from an infrastructure standpoint to do that. We have my coworkers who do that. We have one of my coworkers, Mike Bridges, actually works 2 or 3 times a week in a trading room trading the E-mini. I generate most of my personal income short-term trading, the E-mini, and Forex trading currencies. But I also do a lot of option strategies, and so for anyone who's interested in options from A to Z, if you're a beginner or expert or anything in between, we can work with you there. So again, the focus of what we do is primarily education. Some of the people that I consult, any trades that I do, I use them as platforms for illustrating ideas and education, and to the extent they'd like to go along, great. But that's more or less an overview of what we do. And yeah, so so a forum like this is, I think, a great opportunity to let these things out. But yeah, cool. My focus primarily is on the technical side, and then I'll incorporate other types of information as I think it will further complement the whole situation or the scenario. So, but thanks again.
Cool, fantastic. Thank you, David Kosminder, for having me back. Thank you, Timing Research, and obviously, thank you guys. And I'll have David will wrap it up in a second here, and give you guys another mention. If I mentioned bow ties, persistent pullbacks, and trend knockouts, I'll give you anyone interested who's watching this show those patterns. I have a lot of educational information at davidlandry.com, so check that out. Most of it, or quite a bit of it, I should say, is free. I also have a YouTube channel, so check that out too. At the beginning, I mentioned a 21-page report, which pretty much sums up the entire methodology, and the rest is just details. Those details are important, and there are a few nuances, like we alluded to earlier. But if you understand what I'm saying in this report, you understand the crux of the methodology, and it's a good edge as far as I'm concerned. It's worked well for me. It's something that I enjoy trading. Like I said earlier, it's mostly pullbacks on a short to intermediate term time frame, and sometimes even longer. But again, you can only predict the short term when it comes to the markets. I'm going to turn it over to David Kosminder. Thank you guys again. Thank you, Glenn Thompson. Thank you, George and Milton, and also thank you, Craig, for being here. And I'll let David wrap things up. Thank you, and thanks again to you, David Kosminder. To you.
Okay. Yeah. Thanks, guys. Great discussion. So. For everyone watching, I just want to say again, if you haven't had a chance to see the reports, the current report, or want to download any of the previous reports, just go to TimingResearch.com/reports, and they're all there. Also be sure to go to TimingResearch.com/current-survey before next Sunday to fill out this week's survey. And I want to thank my guests one more time. Glenn Thompson of PacificTradingAcademy.com, George and Milton of FinancialJuice.com, and Craig Hill of TradingConceptsinc.com, and my guest host, Dave Landry of DaveLandry.com. So, thanks, guys.
Thanks, guys.
Thank you.
Thanks again. Thank you.
Thank you.